All right, let's be real for a second. We've all heard it, we've all secretly looked for it, that one magic strategy to always win in the markets. It's the holy grail, right? The ultimate secret. But before we dive into what the real art of trading is, I want you to grab onto one simple, unshakable truth.
Here it is. In the financial markets, there is no genius. Not on Wall Street, not in London, not anywhere, who can win forever. Not Warren Buffett, not George Soros, not any of them. No one. So you might be thinking, well, if even the legends can't always win, what's the point? Ah, but that is the point. What I'm about to share with you isn't about how to beat the market. It's about how to make sure the market can never, ever beat you. Okay, here's our game plan. First, we are going to absolutely dismantle this dangerous illusion of always winning. Then we're going to look at the battle scars of the legends to find out what really made them successful. After that, we'll lay out the hard and fast rules of survival that separate the pros from everyone else. Then we'll tackle the toughest part, the psychological war that's raging in your own mind. And finally, we'll arrive at the survivor's truth, a total shift in what it actually means to win.
You know, every single trader starts their journey with this beautiful, powerful illusion that if we just get the right knowledge, find the right system, we can conquer every single trade. We think we can outsmart the market. But the market, well, the market has a way of delivering a swift, hard lesson that shatters that illusion. I'll never forget this. I was at a seminar in Bangkok, and this young, passionate trader stood up. You could hear the desperation in his voice. He asked, "How can I always win? I've already lost 3 accounts." I asked him why he thought he lost, and silence. But I knew the answer. It had nothing to do with his charts or his analysis. He lost because he walked onto the battlefield believing he could win every single fight. And the market gave him a brutal but very necessary welcome gift. To really get why this mindset is so toxic, let's rewind to 1929, the Roaring '20s. Everybody, and I mean everybody, believed the market was a one-way ticket to riches. People were borrowing money hand over fist, buying stocks and patting themselves on the back, thinking they were geniuses. It seemed so easy. And then, Black Tuesday. Wall Street turned into a living hell overnight. The market collapsed, and all those invincible traders were wiped out. That crash didn't just destroy fortunes, it completely vaporized the arrogant illusion that any formula for invincibility could ever exist. But here's the thing. Some people did survive 1929. In fact, they became legends. And they didn't survive because they were always right. They survived because they knew exactly what to do when they were wrong. Their genius wasn't in predicting the future, it was in protecting their capital. So let's dig into the scars of the real market giants and see what they can teach us. Think about Black Wednesday, September 16th, 1992. George Soros famously broke the Bank of England, netting a cool $1 billion in a single night. We see him as this genius who can predict the market, right? But listen to what he actually says. "I'm not certain about anything. I just know when I'm wrong." You catch that? The key wasn't having a crystal ball. It was knowing his exit point before he even entered the trade. A trader who knows exactly how and when they'll admit defeat on one trade can never be taken out of the game. Now, for the other side of that coin, let's talk about Jesse Livermore, the great bear of Wall Street. This guy was a phenom. He shorted the crash of 1907 and the great crash of 1929, making the modern equivalent of billions. A true genius. And yet, a few years later, he lost every single penny. Why? In his own words, "I always lost big when I wasn't disciplined." The trades that blew him up were trades he took against his own rules. He knew the rules, but in the heat of the moment, he couldn't follow them. And if you think raw intelligence is the answer, let me tell you about a hedge fund called Long-Term Capital Management. Back in the 90s, this place was run by a literal dream team. 2 Nobel Prize-winning economists, the sharpest minds from MIT and Harvard. They had risk models so complex they were practically science fiction. The entire financial world looked at this fund and thought, that thing is infallible. It cannot lose. Then came 1998. Russia defaulted on its debt, a black swan event their models said was basically impossible. And in just a few weeks, that can't-lose dream team lost 4.6 times billion dollars. The fallout was so massive, the Federal Reserve had to step in and organize a bailout to prevent a global meltdown. They didn't fail because they were dumb. They failed because they were so smart, they believed they couldn't be wrong. And when you think you can't lose, that's exactly when the market is about to teach you a very expensive lesson in humility. Okay, so we've seen how geniuses can fail in the most spectacular ways when they don't have discipline. So let's flip this around. Let's look at how a group of totally ordinary people with none of that genius got absolutely extraordinary results. It all boils down to a simple set of survival rules. Back in 1983, a legendary trader named Richard Dennis made a bet with his partner. Dennis argued that great traders could be made, not just born. To prove it, he put an ad in the paper looking for people with zero trading experience. He picked 23 ordinary folks, a journalist, a 19-year-old kid, an accountant, people who knew nothing about the markets. He called them his turtles, taught them a simple set of rules for 2 weeks, and then handed them his own money to trade.
The result? The turtle traders went on to make hundreds of millions of dollars. How? Their mantra was simple: win small, win medium, win big, but never lose big. Their rules were shockingly simple. 1. Follow the trend. Don't predict, just react. 2. Cut your losses short. Get out immediately. No emotion, no hoping. Your first loss is always your best loss. 3. Trade with probability. Don't stand in front of a freight train. And 4. Be patient. Wait for the A-plus setups. They didn't win because they were smarter. They won because they were ruthlessly disciplined.
And this isn't just some one-off experiment. When the author Jack Schwager interviewed dozens of the world's greatest traders for his book Market Wizards, he asked all of them the same thing. What's the secret? What's the most important key? And not a single one said it was some magic indicator or a secret formula. Every last one of them, in their own way, said the same thing. It's capital management, it's discipline, it's cutting losses, it's emotional stability, it's playing defense. They don't have to win every time. They just have to survive. But here's the catch. Even when you know all the rules, there is one final battlefield where most traders meet their end. And it's not on the charts, and it's not in the news. It's in the 6 inches between your ears. The final boss in this game is you. To really understand this psychological war, let me tell you about a guy named Bruno Ixel. In 2012, he was a top trader at JP Morgan. So big, they called him the London Whale. Now, this was no rookie. This was a respected, seasoned veteran with a huge team, the best risk management tech, the whole 9 yards. He was the last guy you'd expect to make a rookie mistake. And then, one of his trades started to go against him. So what did he do? Did he follow the rules and cut the loss? Nope. His ego couldn't handle being wrong. He thought, it'll come back. Then, when it went down even further, he added more to his position. He averaged down. He doubled his bet. He wasn't trading a system anymore. He was trading on pure hope, fueled by an ego that just could not admit defeat. The final price tag for that one emotional decision, a mind-blowing $6.2 billion loss for JP Morgan, one of the biggest trading losses in history, all because one guy couldn't accept that he was wrong. It proves the most important rule of all: the bigger the ego, the smaller the account. This really shows the clear line between the two mindsets. The amateur is driven by hope and fear. They have this deep need to be right, so they chase the market and make emotional calls. The professional? They're driven by a process. They don't fear losses. They see them as a business expense and they manage them. They don't need to be right. They just need to be profitable over time. They don't chase anything. They wait for the market to come to them. So be honest with yourself. Which column sounds more like you? And here's the really tough pill to swallow. Our brains, our human instincts, have been hardwired over millennia for survival, but not for survival in the financial markets. Our natural instinct is to avoid pain, which makes us hold on to losers. Our instinct is to seek pleasure, which makes us cut winners short. Our instinct is to hate being wrong. All of those things are your absolute worst enemy in trading. A successful trader is someone who has systematically rewired their own brain to act against their own human nature. So after all of this, after shattering the illusion, learning from the legends, and facing the war inside our own heads, we finally arrive at the truth. And this isn't just a new definition. It's a complete paradigm shift. It's time to change what it actually means to win this game. So what does always winning really mean? It has nothing to do with a perfect trading record. That's a fantasy. The real definition, the professional's definition, is this. It is the skill of never ever losing so big that you're forced to leave the game. That's it. Because a trader who is still alive, whose capital is intact, always gets to play again tomorrow. But a trader who's been wiped out, they get no more chances. The goal isn't to win every battle, it's to survive the war. The real turning point for any trader, the moment of true transformation, is the day they finally stop blaming things. They stop blaming the market, the news, the brokers, the whales, and they just look in the mirror. It's the moment you take 100% absolute responsibility for every single click you make. The day you accept that you and you alone are responsible for your results, that's the day you start walking the path of a professional.
And that brings us to the final, critical question. After all the charts, all the data, all the strategies, this whole entire game boils down to this one thing. It's the question every legend had to answer, and it's the one you have to ask yourself every single day you sit down to trade. In the end, are you really fighting the market, or are you just fighting yourself?